What's up, YouTube? So this video I actually want to show you let me say one of the best ways in which you can swing trade. And one of the reasons why you should swing trade is because swing trades tends to earn you more profit. I know a lot of you don't believe this, but you make more money when you swing trade. Not only that, you don't have to be staring at your charts every single time. And swing trade is you are less pressured. You are less pressured in the market. So swing trade is actually very powerful. And one beautiful thing that you will learn in this video is the best way to approach swing trade. And I believe after watching this video, after following the teachings in this video, you are going to be consistently profitable. Okay, so I'm no longer using XNES. If you want to use the broker that I use, the link is in the bio. FBS is the way to go. So let's go to my computer screen and let me show you how to how to swing trade the proper way. All right, guys. So this is my computer screen, and I want us to look at this. So basically, there are three things that you need to put into that you need to check out before you take any trade as a swing trader. So the first thing is you want to identify the trend. Okay, you want to identify the trend. The second thing is you want to take note of your support and resistance. Okay, you want to take note of your support and resistance. Okay, the third thing is you want to map out your what's it called? Okay, the third thing is you want to pay attention to price action. Okay, price action pattern. Okay, reverse price action pattern. Actually, price action pattern. Oh, sorry, price action pattern. Okay, price action pattern. All right. So you know, I said three things, so I'm going to add one more thing to it, okay, to make it very, very powerful. And that third thing is what we call VWAP. Now, in my last video, I talked about this VWAP, and I said it's only good for, it's actually only good for day trader, like on lower time frame, like 15 minutes, 30 minutes, 5 minutes, 1 minute, 1 hour. Like, it's very good. It's only good for lower time frame trader. But the thing is that it has a setting for swing trader. Okay, so that setting is what I use as a swing trader, and I'm going to show you here. So let's start with, which one are we going to start with now among these four things? Let's start with identifying the trend. Okay, that is very key. So let me start with gold. Let me use gold as an example, because I'm actually buying gold now, and I'm also buying oil. Okay, so first of all, you want to, when you are trading, you want to understand the direction of the asset you are trading, the security that you are trading. Take, for example, you want to trade gold. First of all, you need to ask yourself simple question: is gold a bullish market or a bearish market? So how do you answer this question? First of all, you can technically look at the structure of that market to see if it is bullish or bearish, and you are not going to look at it on a lower time frame. You are going to look at it from higher time frame. Okay, sorry. Okay, so in this case, for you to know the direction, you need to check on it on higher time frame, like monthly time frame or weekly time frame. And as you can see, okay, as you can see, you see this market is in an uptrend. Okay, is in an uptrend. As you can see, that shows that this market is a bullish market. Okay, is a bullish market. So since you've established that, what you need to do thereafter is go to your lower time frame and start looking for buy opportunity. Okay, buy opportunity, you want to look for pullback and buy into that. Okay, so you come to daily time frame, you can move to daily time, you can check weekly time frame too, but let's just move straight to daily time frame. Okay, let's go to daily time frame. So if you look at daily time frame, you will see that the market has actually been making higher highs, higher low, which is an uptrend, like we said, like we agree on. Okay, it has been pushing up, down, pushing up, down. Okay, Let me remove this so that I can do it very well. Okay, it has been moving up, down, up, down. Okay, like higher highs, forming higher highs, higher lows, higher highs, higher lows, higher highs. Okay, higher lows. Okay, actually click there twice. Higher lows. So we expect another higher highs, higher lows like this. Okay, so this is what we expect. This is what we believe will happen in the market right now. So now what you just have to do is that when there is a pullback, you want to look into that pullback. Okay, when there is a pullback, you look into the pullback and buy the pullback. Now take for example, there is a pullback here. If you look at the trade I take, there is a pullback here. I took a buy position. There is a small pullback here. I took a buy position. There is a consolidation, or should I say pullback here. I took a buy position. There is a small pullback here. I took a buy position. The pullback that I bought here are small pullbacks, and they are only visible on lower time frame, like 4 hours. They are visible there. But one of the things that you need to understand is the fundamental at the particular time. So the fundamental behind this movement during this particular time is bullish. That was when the US tariff is still hot, and the market is the equity market is not stable. The equity market is crashing, so people are putting money into gold, safe haven assets. So I was buying into all this particular move. So but the bottom line is, when there is a pullback like this pullback, you see I bought into the pullback even though I didn't hold the trade for long. I bought into this pullback, didn't hold the trade for long. Bought this pullback, didn't hold the trade for long. Now I bought this pullback. I close a position here. Now I've entered here after the break of this particular resistance. Okay, so when there is a pullback, then you want to be looking for buy opportunity. Okay, so you want to be looking for buy opportunity when there is a pullback. Okay, so in this case, as you can see, that this is the pullback. I'm supposed to have entered here, but I was a little bit nervous because of certain things, because the equity market is doing good now and I expect the good to crash. Okay, so what happened? I later bought around here, and what gave me the entry, I'm going to tell you. So apart from the fact that there is a pullback and I expect another momentum move to the upside, I bought here. Okay, so because the market is bullish, that is the first thing. I've tried the trend now, so I was buying. Okay, I was buying. So the second thing is I mark my support and resistance. So let's look at the second one, which is support and resistance. So I've identified the trend. So now I identify my support and resistance because I want the market to be bouncing off a support or resistance before I take any position. So let's look at, okay, I'm using gold as an example. So let's look at what the market was doing. Okay, so when the market bounced, it bounced from what? A decent support. Okay, it bounced from here. Okay, so this place was used as a resistance. It touched it as a resistance, then use it as support. Okay, touch it as resistance here, touch it as a resistance here, use it as support here, use it as support here, came back to test it and use it as support here again. Now the market came back again to use it as support. So here is where you want to be considering buying. Okay, so you want to be considering buying here because the market have actually shown you that the market is testing a support. If it had broken down here, then you should be expecting a retest of either this particular resistance. Using it, the market might use it as support. This particular resistance, the market might use it as support. If that doesn't work, then it definitely will come here. This particular support can actually be used. So these are the three key major areas that you should in this case you will be looking at this particular part. Okay, and this particular part or this particular part. So one of the mistakes that a lot of people do is that when they enter this kind of trade here, and it moves against you, okay, it moves against you and hit your stop loss, and you enter here again, it moves against you and hit stop loss. If you use bigger loss size, you might have blown your account from these two losses that you have here, and then you will not have money to enter again when the price gets here. This is why you have to make sure that you minimize your exposure to risk. You have to minimize so that at least if you lose the first time, second time, at least the third time, you have the opportunity to enter the market again. And if you enter the market from here, then you can be rest assured that you can hold this position for as long as and recoup all your losses and make a huge profit from it. This is why you want to make sure that you practice what we refer to as risk management. Okay, so
this is why you don't just put all your capital in one single trade. Anything can go wrong, so you have to be sure of that. So when I was taking this trade here, I believe that if it happens, then it will be coming here, then I will have the opportunity to enter from here. If it happens again, it will come here. So these three areas are the major areas that I focus on, but luckily for me, it moved from here. So now that is how you want to mark your support and resistance, identify the area and buy from there.
Before we continue with the video, I want to say something quickly. You see, trading is very complex in the sense that it comprises a lot of things. There are so many things you need to master, like risk management, psychology, fundamental analysis, technical analysis, and even the fundamental and technical analysis are very deeper than you think. And the most important part, which has to do with psychology and risk management, are very, very important. So for you to master all these things, understand all these things, because these are the things that determine determine if you are going to be successful in this field. So for you to determine, or for you to master all these things comprehensively and become a master yourself, you will probably have to take a comprehensive course. Okay, so if you intend to take my course, I will leave the link in the description, so check the description and take the course. If you finish this course, I believe you should be able to be a teacher of this particular field yourself and make consistent profit. So let's go back to the main video.
So that is where you want to buy from there. So the next thing is that now that you've identified that, now that you've understand your support, how you mark it, so you trade in the direction of the trend, the next thing is we will look at the next one, which is price action. Then the last one is going to be the VWAP setting. So let's look at the price action. Okay, the price action, you want to make sure that when the price was coming here, it's from what we refer to as some kind of reverse price action pattern. Okay, like double bottom here, but in this case the double bottom didn't fully form, because this is supposed to be of the same bottom. But nevertheless, if it forms like this, if you see something like this, it means that the second bottom is not even strong. The seller is not even strong enough to push the price to the same level as this one. So which is a sign of bullish engulfing, which is a sign of bullish bullish traders coming into, buyers are coming into the market and bullish are becoming exhausted. But normally you want to look for double bottom. Just take for example, in this case now, you can see my double bottom here at a support area. And don't forget, support area is actually an area, not just a line. So this place can be seen as support. All this place can be seen as support area, because this is a resistance. It can be seen, all this area like this can be seen. Let me draw this. All this area can be seen. It's not just a line, it's an area. All this area can be seen as your support. Okay, because price has actually reacted here. Price came back to retest the support. Now price is now there again, making it a support. So you can see the double bottom formed at that particular point. So when you see this double bottom, you want to take your trade. Okay, that is the second thing that you want to look out for. Okay, that a third thing that you want to look out for, that I look out for basically. So now this is not the only pattern that you also look out for. You also look out for reverse head and shoulder pattern. In the case of sell, let's say you want to sell, you should be looking for double bottom and head and shoulder pattern. Okay, so that's about that. However, there's another thing I didn't mention when I was listing this. There's another indicator that I use. Okay, there's another indicator that I use, which is going to make it 5 things that you need to look out for. 5 things that you need to look out for. So that indicator is called RSI. Okay, so let me just show you how it is, so that RSI is the last one. So RSI, then we'll talk about VWAP. So now RSI, when you now have this double bottom, like in this case now, you want to look for that. You want to look at your RSI. Okay, this is my RSI. Let me show you. And look for divergence. So you want to see that the market formed double bottom here, but the RSI is giving you divergence to the upside. It's giving you higher highs, higher lows. Okay, higher highs, higher lows, like that. So that is what you want to look out for. You want to see that the divergence is moving to the upside, like the RSI is moving to the upside. So that is an opportunity. That is a sign that you want to buy. Here the market didn't form double bottom, but you can see your RSI showing you that the market is to the upside. Okay, the momentum, the RSI is giving you higher highs, higher lows, which is an uptrend kind of signal. Okay, so that is what you want to look out for when you see this bottom. Okay, so when you've done that, the next thing that you want to do is look at our VWAP. As you can see, this is my VWAP here. So if you look at this trade, I didn't take this trade here because of so many things, so many reasons fundamentally. So, but at the end of the day, when I see the market breaks this, this is not a moving average. For those of you who don't know, I've actually made a video about it. You can check my previous video, you will see it. Where I say this is the only indicator that you need. That video, I talked about this this particular indicator. It's not this thing. So you see this indicator break above. It was when it break above the RSI that I took this position. Okay, so you want to understand that. And why this indicator is so powerful is that this indicator, whenever the market breaks above or retest it, you want to make sure that you follow suit. Let's say, for example, market breaks above it, below it here, you can sell. Okay, when the market came back to retest it and form double top here, you can see the double top. I see the double top. Okay, this is the double top. So this is also a sign for you to sell this market, and you can see the market drop down to this particular point. So you can see the market after closing above the RSI here, it buys to the upside. You can see after the double bottom, the price break into the RSI, close there, and then start going up. Okay, so that is how you want to look at the RSI. But I say RSI, VWAP. But there's one thing you need to understand about this VWAP. VWAP, this setting is different from the usual setting. So when you want to set it, when you install VWAP and you come to setting, okay, what you want to change is this anchor period. Normally the anchor period, the default setting is going to be on section. It's going to be on section. So you are going to remove it from section if you want to use it for swing, and put it on weekly. So what means that the VWAP is going to calculate price and volume of the market for every week and reset itself every week. Now let me show you an example of what I mean. Let's look at this trade that I'm in crude oil. You see VWAP, after this drop, I was waiting. This market is at a resistance, and I have so many reasons to be scared of buying this market because the crude oil market is actually bearish right now. Bearish. There is oversupply in the market. It's bearish. So I didn't want to buy, but at some point I just feel like I should take a risk. Reason being that, first of all, there is a double bottom here. This is the first bottom. This is the second bottom. If you look at it on daily time frame, it's going to be clearer. This is the second bottom before this particular push. Because on Saturday, OPEC decided to release more crude oil into the market and cause this particular sell-off or price pressure on price. So when the price fall, I was looking at the market, and then the price came back and closed back into this particular support, and then also closed back into our VWAP. As you can see, if you click on the candle, look at the date below. Just be looking at this particular area. If you look on this candle that closed inside, it was on Monday. So when this happened, and I saw that every candle that comes afterwards, they are leaving weak on the RSI. They come to the RSI, leave weak, and flow back into the RSI. That was why I took my buy position, and I've been holding the trade up to now. The same thing, if you look at my gold trade, okay, you will see the price close back into the RSI, into the VWAP. That was when I took the trade. You see all these things that I've just showed you. If you can combine them together, if you can put them together and master this act, you are going to be profitable. However, you also need to factor in fundamental. I believe this video is helpful. Like and subscribe for more videos like this, for more explanation, for more detailed explanations on trading and how to be consistent. So see you in my next video.